Hello, everyone, and thank you for joining us for today's webinar to discuss executive pay in the time of COVID-19. My name is Annie, and I will be facilitating this session for you. So today's presentation will be given by a set of panelists, all from different member firms of Ius Laboris. We have lawyers from Belgium, Italy, US, and Russia joining the panel today. Okay, that's all from me. I will now turn over to Jan to start the session.
Hello, thank you, Annie, and welcome to you all. My name is Jan van Giesegem. I'm a partner at Claeys Engels, the Belgian member of Ius Laboris, and doing a lot of work in executive pay and pensions. And I'm joined today by colleagues from other jurisdictions who are also specialists in this area. Emanuela Nespoli from Italy, Tiffany Downs from the US, and Anastasia Petrova from Russia. And I'm joined by all three because we wanted to give you a view of this topic from the EU, from the US, and from Russia, so you get different perspectives on what's going on in this area. So let me start perhaps with the question why we are talking about executive pay in times of COVID now. Executive pay is always a hot issue. It's a recurring theme. Every now and then there will be public outcry about somebody's executive pay and how it is in disproportion with what the workers in a particular company earn. And that has always been the case, but we think it is increasingly so, and we wonder what is going to happen in this area in the upcoming annual report season. Many companies will publish their annual reports in the coming months. We will have general assemblies, shareholders meetings, usually in the spring in many countries, May, June. And the question there will obviously be, how has COVID impacted executive pay, and how does that compare to what the impact has been on a lot of workers in the company? And we'll probably see a lot of information on pay cuts for executives, but we'll also get the question whether that is enough to compensate for the temporary unemployment that a lot of workers have had last year. And so the topic is not going to go away. We think it's a hot topic, and also the regulation of executive pay is not going to go away. We have increasing regulation in this area, and we'll talk about that in a bit. But maybe first hear from the panelists whether they share my impression that that is going to become on the agenda in the next couple of months. Maybe Tiffany from the US.
Thank you, Jan. Yes, that's correct. In the US, executive pay is especially a hot topic right now because under US law, the CARES Act was passed, which provided loans and loan guarantees to companies. And part of the eligibility to receive the loan is to put restrictions on executive pay. And so executives making between $425,000 and $3 million would potentially have a cut in pay during the loan period, both at the time it was granted and the time it was paid off. So there will be some restrictions on that, and it'll also impact the reporting of executive pay as part of the during the reporting season of annual meetings of what the executive pay is compared to the median worker. So that will definitely impact that as well.
Thank you, Stephanie. And Anastasia, what about Russia?
Thank you, Jan. So actually, COVID-19 has not changed the basic legal regulations on the executive pay in Russia. However, the economical crisis has changed the approach to remuneration and in particular to executive pay. So we see there are new business trends in this regard. For example, business more often use deferred incentive practices. there is an increase of variable part of remuneration and decrease of fixed part of remuneration. We see that last year companies had to pay a lot of severances due to restructuring, which was followed by redundancies or employment termination. And many companies decided to refuse from merit increase of the salaries in various jurisdictions and including Russia. So this also impacted executive pay, executive income. And also we see that certain clients have suspended or even canceled payments under share plans.
Thank you for that, Anastasia. Well, with that, let's turn to our first topic. And the first topic is the transparency of executive pay. There is increased transparency in remuneration reports, and from a legal point of view, the topics that interest us are really what is disclosed, is it collective or individual disclosure? A very hot question in a lot of countries. Traditionally, we had individual disclosure for CEOs, but increasingly we see that also other members of the executive committees are now forced to disclose their salaries. And also what the information is you get about the company and the company strategy through remuneration reports. In the European Shareholders Directive, there's a requirement to really disclose how the performance indicators were met, which basically means that a company needs to disclose what performance indicators it uses and thereby discloses part of its strategy. As Tiffany was saying, in the US and also in Europe, pay ratio is an issue. Increasingly, companies are forced by regulation or by corporate governance codes to disclose the ratio between the remuneration of the CEO and that of the average worker, the median salary, in some cases the lowest salary. The concept of pay ratio is something that is not well defined and that can be filled in different ways in different countries. And finally, there's always the question, of course, does disclosure have an impact on pay levels? The idea behind a lot of regulation is that by increased transparency, there will be moderation of pay, but I think the jury is still out on whether that really works. So with that, Emanuela, maybe you can give us the view from Italy on what this remuneration report should look like.
Yes, thank you, Jan. Hello, everybody. So I think that starting from Italy, what we can say is that there are several laws which have implemented the provision of the AC directive on this topic, and specifically there are specific laws regarding banks and financial institutions, insurance company, and listed companies. Of course, the way in which our legislator and also the relevant bodies that governs locally the three sectors has implemented several rules and regulation on this point. What I can say in general terms is that in line with the structure of the bench of directives on this topic, which are different in the banking and financial institution in respect of what is needed for listed companies, we can say that in Italy, for banks, there is a prescriptive approach. So our legislation is not limited to require to banks to disclose their the way in which they structure their remuneration policies, but they also imposed strict limitation that we will see a little bit later. On the other end, as far as listed companies concerned, the approach is more descriptive. So also according to the new changes recently introduced in our legislation, we will see that the numbers of information and the level of details that companies has to disclose collectively is increasing a lot. But regarding the way in which they have to disclose, what we can say is that the online disclosure is now a requirement for banks and financial institutions, insurance companies, and listed companies. This is something new as far as listed companies is concerned. The information regarding the remuneration policies must be disclosed, put online at least 25 days before the General Assembly, because the real new things that will happen is that according to the AC regulations, starting from this year, the remuneration policy must be approved by the shareholders also for listed companies. Basically, also the information contained in the remuneration policies must also be disclosed to the Bank of Italy and to the IVAS, which is the regulatory body for the insurance company. And of course, during the General Assembly, the remuneration policy in general, but also we will see what has been paid the year before, the information regarding the individual payout must be disclosed collectively. Basically, I try to summarize what are the main information that in all three sectors must be disclosed. There are so they are basically the criteria to identify the risk takers. So the person that are involved not only in the disclosure, but also in the limitation of the structure of the remuneration, detailed information on pay mix, so the ratio applied and applicable to calculate the proportion between fixed and variable remuneration, the variable pay structure, so the indicators that must be considered for the calculation of the result and how they are calculated, the way in which the payments must be deferred. This is especially really important in the credit sector. And also the clawback and the malus mechanism that must be introduced and must govern and must be applicable to the payout, especially that the employees received. And as I said, the description of the amounts paid the previous years, and last but not least, the way in which the severance, so for early termination, must be drafted and must be calculated. So this is a nutshell what are the main information that must be included in the remuneration policy, and I leave the floor to Tiffany to explore what's happening in the US.
Thank you, Emanuela. Under the Dodd-Frank Act, it required the pay ratio disclosures. And this has been in effect since it became applicable in 2017, and it was reported in 2018. The purpose of it is to show what the pay ratio is of the CEO to the rest of the employee population. The good news is that the SEC allowed a lot of flexibility on determining how many employees are included in the count and how to determine what the compensation of those employees were, whether it was directly reporting all compensation or using a median. And if you use a median, you have to describe in the disclosure what how the median was picked, and that person can be used for 3 years. COVID has complicated, or the pandemic has complicated it this year, because with the furloughs and layoffs and reduction in pay, the 3-year period may not be able to be used. And if the 3-year period was picked, that would be ending in 2020 anyway, based on the first year of 2017. So companies should really look at how they're going to report for the year 2020. And what is, given the different changes in headcount and compensation, it definitely is worth re-examination of how to report. There's also including a narrative of if the CEO had a reduction in his pay, that should be disclosed, because you want to paint a picture that you're mindful of the economic circumstances. So that it may take longer this year to report that. Also, so that is the pay ratio disclosure, which is looking at the CEO compensation compared to the rest of the employee population and the difference in those numbers. But there's also another disclosure involving all total compensation of the CEO and the average of compensation for the remaining named executive officers. So that has to be disclosed as well as part of this transparency of the disclosures. So there is likely to be some additional guidance dealing with reporting on the pay ratio in light of the pandemic, but for now, we rely on the prior guidance. And with that, I'll turn it over to Anastasia.
Thank you, Tiffany. So if we talk about transparency requirements in Russia, so actually transparency requirements do not apply to all businesses in Russia, but just to certain types of companies. And these are generally listed companies, public joint stock companies, certain non-public joint stock companies where the number of shareholders exceeds 50, and if a company has publicly placed bonds or other issued securities. Besides, these companies must disclose the amounts of compensations that they paid to their executives on annual basis, and this shall be done as part of disclosures of their annual report that includes accounting and financial report. But besides this, we also have certain industry-specific requirements. In particular, credit organizations and banks must disclose their remuneration policy annually, and actually more information on remuneration of their key management personnel must be included in such disclosures. And such information in particular cover short-term remuneration to employees, remuneration upon employment terminations, severance payments, long-term remunerations, and share-based payments. Russian legislation provides for very detailed guidance in respect of the disclosures of remuneration that is paid to top executives of banks and credit organizations. And in particular, the law mentions what information must be provided regarding long-term remunerations, and there is a quite a broad list of information which must be disclosed in this regard. So thank you. I will turn the floor to Jan for the next topic.
And the next topic is after transparency, shareholders say on pay. In the European Union, that is a debate we have since the Shareholders' Rights Directive has been adopted. It is by now implemented in most member states, and as its name suggests, it's all about how much shareholders have to say in companies, and it focuses on a lot of topics, but one of them is remuneration. And in terms of remuneration, the Shareholders' Rights Directive makes a clear distinction between what we already heard, the remuneration report and the remuneration policy. In essence, the remuneration reports gives you the figures of remuneration for the last year. The policy is a document that looks forward at how pay will be determined in the future. And under the directive, the shareholders get their get their say on both topics, the remuneration report and the remuneration policy, although of course in varying form. If the shareholders disapprove the remuneration report, that will not of course change the remuneration packages that have been paid in the previous year, but it will send a signal to the board of directors that something needs to change. On the remuneration policy, by contrast, they really have their say on how the remuneration packages should be determined in the future. And Emanuela is going to explain to us how that works in practice in Italy.
Thank you, Jan. Yes, we in Italy, we implemented the directive just mentioned by Jan and specifically Article 9A and B of the Director. And we recently have a resolution of the CONSOB, which is the National Authority for Listed Company, which clarified at the end of 2020 the requirements that the new remuneration policies must include for the futures. And more important, as Jan just said, starting from this year, there will be the binding vote of the shareholders at the annual General Assembly in order to the content of the remuneration policy. On top of this, the Italian law provides also for an advisory vote of the shareholders on the remuneration paid and granted the previous year. So there are two main topics on which the shareholders are now required to express their will. And starting from this year, also the pay policy will govern also the remuneration of the auditor, so the supervisory body's member. And what is important and that must be taken into consideration for the revision of the current remuneration policy is that what is provided for in the policy can be derogated only in exceptional circumstances. And also the circumstances and the way in which the policy can be derogated must be specified in the policy itself. This is I think a correct transposure into the Italian legislation of what the directive said. Again, according to what the CONSOB resolution provides, this year the remuneration policies must include detailed and specific information on different topics. And so this year will be required more attention and more specification in the description of, for example, any exception to the pay policy, as we said before, on how and if and when the mechanism for reducing or clawback the variable remuneration have to be applied. There will be, and this is very important, and this is again in line with what the directive provides, there must be a comparison between the annual changes in the pay of the top managers, let's say, the company result, and also the average of the pay of the rest of the working population. Now, of course, the provision is quite new, and the provision makes reference to a period of 5 years. For this year, there will be only the need to make this reference to the remuneration received starting from 2019. On top of this, in the remuneration policies for the listed company must be explain the ratio between the fixed and variable remuneration, and also the performance target reached, and a comparison with the targets that was foreseen between the pandemic. So, I mean, according to what we are saying from the clients, of course, the year 2020, the results are in general far below what it was expected. And last but not least, there will be the need to clarify how the severance payment can be awarded to the top management, specifically the circumstances in which the severance pay, so what is on top in respect of the general and the mandatory payments, can be assigned, if there are performance results to which the severance must be calculated, in terms like the variable pay in a nutshell. And of course, the amount that has to be paid. So there will be, let's say, companies will be required to pay a lot of attention in the payment of severance, also considering the global economic situation of the companies due to the pandemic that unfortunately happened last year. So that's for Italy, and I'm very curious to understand what happened in the US.
Yes. The Dodd-Frank Act, if you can't tell, is kind of the main law that governs executive pay in the US. So the Dodd-Frank Act has two provisions with regard to say on pay. One is that shareholders or stockholders can have a vote on executive compensation, but it's a non-binding vote. And then they also can have a say on the frequency of that vote. So how frequent the stockholders will give it an indication of say on pay and whether they approve of the compensation to the executives. So companies typically once every 3 years have to submit a resolution for stockholders to approve the compensation of the executives. And this has to be disclosed in the proxy statement. And then every 6 years, there has to be a vote, has to provide a vote on how frequent the say on pay vote will occur. And the vote, there are a couple of options. It can occur every year, every 2 years, or every 3 years. The interesting thing is the say on pay votes are not binding on the company. And so it's just really a recommendation or a temperature check of what the stockholders are thinking about the executive pay. It doesn't override any company or board decisions, and it doesn't create any new fiduciary duties or change in fiduciary duties. And it also, it doesn't restrict the stockholders' ability to issue any other proposals too. So if they wanted to, as part of the vote, issue other types of suggestions, that is a possibility. With respect to clawbacks, the Dodd-Frank Act also requires clawbacks if a company has to restate their financials. If there's a material misrepresentation in the financial statement, the SEC has required that there be a mandatory clawback, potentially up to 3 years before the material misrepresentation. But the current trend is for companies to also include clawback provisions in employment agreements, as well as equity options or grants, provisions in those plans to include other than material misrepresentation, other types of things like misconduct, fraud, breach of a restrictive covenant. And so they're becoming more prevalent, their usage, to try to model behavior and potentially claw back. So with that, I will turn it over to Russia.
Thanks, Tiffany. So talking about shareholders' say on pay or shareholders' vote in respect of remuneration, I think first of all it was to talk about share plans and incentives for Russian employees of international companies that are based on options. The point here is that such incentives are often administered from abroad by the headquarters of the Russian entity being the direct employer of Russian employees. And the agreements on such incentives are concluded between employees and foreign headquarters of their Russian employer. So thus we can state that the involvement of shareholders in taking decisions with respect to such incentives as share plans and incentives based on options are extremely high. Generally, we also have certain approval requirements for payments to such executives as chief executive officer or general manager and members of management board. In the companies incorporated in the form of limited liability company, the salary of CEO or management board member must be mandatorily approved by the shareholders assembly or board of directors, depending on what management body is responsible for that based on the articles of association of the company. And it is crucial that such approval shall be fixed in the resolution or in the minutes, which must be signed by the authorized person or persons. In joint stock companies, there is no same requirement. However, they do follow the corporate governance code, which recommends to approve the remuneration policy of the members of the board of directors and executive bodies, including general manager and other key managers. And such approval must be done by the board of directors. Also, this corporate governance code recommends to establish the remuneration committee, which will approve the policy on remuneration for all top executives. It also was to say that employment and other contracts with CEO and other top managers of the company, which set out their pays and benefits, including bonuses, incentives, and so on, including severance payment. So these contracts may be qualified or recognized as major transactions or interested party transactions. And such transactions may require additional approval of the shareholders or board of directors. Major transaction is a transaction beyond normal business activity of the company that meets certain criteria and which cost is equal or exceeds 25% of asset value under the accounting balance sheet. And interested party transaction is a transaction with the interest of board of directors member, CEO, member of management board, or a person being a controller in respect of the company, or who is authorized to give mandatory instructions to the company. So it's very important to keep this potential recognition of such contracts establishing payments as major transaction or interested party transaction in order to get the approval when it is necessary. And as regards clawbacks in Russia, this sphere is not well regulated. And if we come to labor law, we'll see that it is absolutely impossible to get the money back if they already paid to the employee, because we have a limited number of circumstances where the salary can be paid back from the employee to the employer. And normally these circumstances do not apply in ordinary circumstances, in ordinary cases. And the only point which can be used here is if we see that the executive made certain harm to the company, then we can go to the arbitration court and try to claim this money back. Thank you. That's all. I turn the floor over to Jan.
Turning now to the financial sector in particular, because that is certainly the industry where executive pay has been most heavily regulated in the wake of the 2008 financial crisis. And since then, we have seen in the financial industry a lot of different forms of regulation, caps on variable pay, caps on severance pay, mandatory deferral of variable pay, mandatory payment in financial instruments, and of course the malus and clawback arrangements that need to be put in place in the financial industry. And certainly in Europe, all this is regulated at the European level, with some differences between individual countries. The cap on variable pay is, as a general rule in Europe, 100%, so a one-on-one rule for identified staff in credit institutions or banks, but some countries have lowered that requirement. In Belgium, it is 50%, and in the Netherlands, variable pay in the finance industry cannot exceed 20%. So let's have a look now at what is going on in Italy in this area.
Yeah, thank you, Jan. We have all of this and even more, because in Italy, not only we implemented the AC directive, but the Bank of Italy issued a very important circular back in 2013. And this let's say that this act introduce several and further limitations in respect of the payout affecting this sector. So as far as the pay mix is concerned, we must respect a ratio of the 100% of the fixed remuneration, only in limited hypotheses and provided that the change has been approved by the General Assembly, the ratio can be increased up to 200%. Malus and clawback mechanism are absolutely mandatory. And those are really important because according to the local legislation and according to the instruction received by the Bank of Italy, the hypothesis included in the AC directive has been extended. So there are several cases in which banks must claw back the payment already done or not pay the variable pay not yet paid. Another thing that must be taken into consideration is the balance between the financial instruments and money. So there must be a 50% of variable pay that must be paid not in cash, but with the financial instruments. Again, and on top of this, in the banking sector, deferred payments are again mandatory. And the percentage of the payment that must be deferred is normally the 40% can be increased up to 60% in case variable pay is really significant. And this is again another thing that must be absolutely taken into consideration, that severance payment, so golden parachute and payment for early termination of directors and top executive, but also of the rest of the general population must be, let's say, save for some exclusion that are listed in the circular issued by the Bank of Italy, are considered variable pay. And that has an important consequence that the severance must be considered and ruled as variable pay with all the limitations that are provided for variable pay. And so as a consequence, in the banking sector for banks and financial institutions, it's crucial to draft a bonus plan, long-term plan in line with the regulations provided for this sector. But not only bonus plan, also individual agreements must be drafted in line with the provision provided for by the law and by the instruction of the Bank of Italy, because the risk is that the agreement is considered null and void. And we had recently a decision of the Court of Appeal of Milano, which confirmed a decision of the tribunal. So the decision of the Court of Appeal arrived November 2020, and they considered null and void the agreement for the payment of, I think, around 1 million euro to an executive for the termination of his contract, because in the agreement was not provided clawback and the malus clauses. And for this reason, the agreement was, I mean, in the part in which it was provided for the payment was considered unenforced. Last but not least, less strict rules are to be implemented for bank of small size bank, let's say, but those are changes that are still not yet issued by the Bank of Italy, but we expecting to receive a new instruction sooner. Thank you, and Tiffany, it's up to you.
Thank you, Emanuela. So in the US, again, the Dodd-Frank Act governs provides additional requirements on financial institutions that are considered covered financial institutions with more than $1 billion in assets. In 2011, the SEC approved a rule, and really it deals with just incentive-based compensation or variable-based compensation. And the rule provided that incentive-based compensation could not be so excessive and to encourage risky decisions to be made to affect the financial stability of the institution. So, no risky type or no excessive compensation that would reward risky behavior, that the compensation 50% had to be deferred over a 3-year period for companies with assets over 50 billion, and the covered financial institutions had to provide a report to the SEC on what its variable compensation or incentive-based compensation was, and the company is required to maintain policies and procedures. In 2006, those rules were modified, and a little more structure was put in place with respect to the larger institutions and divided up institutions based on their asset size. So potentially there's a level 1, which is a company, institution that has greater than 250 billion, level 2 between 50 and 250 billion, and then level 3 between 1 and 50 billion. And so obviously there are more greater restraints and conditions put on the level 1 and 2 entities because of the higher assets, but the general principles remain the same with respect to trying to manage risky types or discourage risky types of investments. So with that, I will turn it over to Anastasia.
Thank you, Tiffany. The level of regulation of executive pay in Russian financial sector is actually very high. So we have a number of requirements to setting out the executive pay. In particular, we have pay caps for Russian credit organizations. For example, at least 40% of the total target remuneration of the members of the executive bodies and other employees taking risks shall be variable. And fixed remuneration of employees of compliance departments and risk management departments shall compose at least 50% of the total remuneration. As respect to severance payments, so they must not be random and they must be based either on legal requirements or on internal policies of the companies and on different various principles, including principle of reasonability. For example, we have general regulation for setting out severance payment in the amount of 3 months average salary for the CEO in case of his or her termination without any wrongful doing from his or her side. And we have the same amount, which is 3 months average salary for the cases of bankruptcy, employment terminations. In case of such terminations, this severance must not be lower than this 3 months average salary for CEO, his/her deputies, members of the collegial executive bodies, chief accountant, and his/her deputies. As regards deferral payments in Russia, in Russian credit organizations, so at least 40% of the variable component of remuneration must be deferred. And internal policies must provide for a possibility to reduce or eliminate a variable part of remuneration if the financial results are negative in general or in particular business activity of the credit organization or bank. Thank you, and I turn the floor over to Jan.
Before we get to our last topic, remember if you have any questions to raise them in the Q&A. Our last topic is gender and executive pay. We seem to have a bit of a gender gap in this panel, and that is true also in a lot of executive teams. And the question is regulation doing anything about this gender quota on boards? And also gender pay gap reporting. We see that in a lot of countries, but is there also a tendency towards gender pay gap specifically in the area of executive pay? Those are my last questions for our panelists, and we'll start again with Italy.
Okay, thank you. So yes, we have all of this. First of all, as far as the number of directors in Italy, in the board of director of listed company, there must be a 40% of appointed director of the less well represented gender that in general terms are women. And this is quite an important news, because in the new release of the circular of the Bank of Italy will be introduced a new section with reference to the gender pay neutrality principle. So in a nutshell, banks and financial institutions must adopt remuneration policy which are specifically aimed to promote the complete equality between men and women, as far, of course, as employment condition, but also remuneration is concerned. And last but not least, our equal opportunity code between men and women provides for a reporting obligation at least every 2 years. So according to this, obligation, company must report the situation of the occupation between male and female employees, and specifically, but not only limited to the remuneration paid, and also in general to the working conditions. So that's for Italy. What about US?
Thank you, Emanuela. In the US, we are a little bit behind, I think. We don't have any federal law that really mandates gender quotas on boards. California was the first state to require a mandate of a number of females on boards. And they, unfortunately, I think that the flaw in the law is that they required a number. So 1 female director on the board by the end of 2019. And the next goal is to have a 2 females of a 5 board or 3 females of a 6 board or more by the end of 2021, so this year. But a lot of criticism of the statute is that it should be done on a percentage basis, because there were a lot of workarounds that companies just added 1 more board seat, but it really didn't change the dynamics. There are a couple of proposed legislation in both the House and the Senate that would require companies to disclose what their board makeup is and how they hire their board members, what's the criteria. And so really the proposed bills would be looking at promoting diversity, inclusion, and equality, looking at several aspects of board selection and decision making. So more to come on that. And the only other law that we really have with regard from a federal perspective involves Equal Pay Act and ensuring that there is no discrimination in pay based on gender if the employees essentially perform the same job and have the same skills. That law has been around since 1963, but I think there's a debate on whether it has had any significant impact. So there could be more legislation coming with the new push for diversity and inclusion. With that, I'll turn it over to Anastasia.
Thank you, Tiffany. Actually, there are no special requirements on gender equality in Russia. However, we have certain basic implications which are established in Russian constitution. And if we are talking about employees, they are also established in Russian labor legislation. So actually, we have a general prohibition of discrimination on any grounds, including gender. And actually, any grounds must not be related, which are not related to professional skills and qualities. And this is what is set out by Russian labor law. We also have a principle of equal opportunities and equal pay for labor, which is provided by Russian constitution and Russian labor law. And we also have a requirement established for all employees, a requirement to increase the salaries according to the increase of prices and goods for services. And this must be done for all employees on non-discriminatory basis. This must be done systematically, ideally each year. Each company, each employer must have its indexation policy, which will set out the rules for such increase and fulfill provisions of this policy. So this indexation of the salary shall be equal for all employees regardless gender or other factors. For example, it can be increased for 5% per year, and so all this 5% must be applicable to each salary in the company. Thank you for your attention, and I turn the floor over to Jan.
We're about at the end of our presentation. There's some time for questions. If you want to raise a question, you can do so by using the Q&A tab at the bottom. I have one question here, Emanuela, for Italy. You were talking about the Milano case and how a pay arrangement was deemed null and void by the court. But are there any other consequences for banks if the provisions on the remuneration policy are violated?
Absolutely. Thank you, Jan. Yes, absolutely. It's not only a question of the nullity of the individual agreement, but the violation of the remuneration provision and the disposition of law and of the Bank of Italy in respect to this subject can lead the application of fine, very huge fine for banks. And we are, of course, depending on the kind of violation, but let's say that the range can vary between 30,000 K up to the 10% of the turnover of the bank. And in addition, there could be sanction also for individuals. And the sanction can reach 5 million euros. So we must pay attention.
Quite strict, yes, and I think we're seeing that in many European countries that the banks do not, the national banks, the supervisors are not taking this issue lightly. So it's certainly something to pay attention to. Maybe one last question, Tiffany. You were talking about the impact of COVID and the changes in employee headcount. How do you think that will impact the disclosures in the US?
So I think a lot of people are speculating that it will impact the numbers, but I think for the most part, CEO pay was reduced along with employee pay, so the ratio may not change much. I think the big question is who is going to be included, because if there's furlough employees, are they still considered an employee? Does that will impact the head count to determine what the ratio looks like. So I think there's probably not going to be a change in the ratio, but really a change in what employee headcount is in pay.
Yeah, that's the same question we have here, really, for the average employee. They're on temporary unemployment, receiving allocations from the state, unemployment, and the base pay remains the same. For executives, we do see pay cuts. And then, of course, the question is how that translates into the pay ratio requirements, which, as I said earlier, are really different from one country to another. I think with that, we're at the end of our webinar, and I can turn it back to our moderator, Annie.
Yes, thank you, Jan. So just some final last words from me. So for any questions, audience, that you might have, our panelists will remain available by email as well, and you can check the slides for their contact details. And here on the screen, you can see that I've added you the link to the pay and benefits section of our website, where you'll find many interesting resources and articles. Then for more information about today's topic, I advise you to check out our report on executive pay covering 15 countries, as well as a as we recently did with Jan on the same topic. You have the links there for both resources. And then lastly, for more information on our webinars, you can visit the webinar section of our website and find all the recordings and also download the slide decks. Everything is also available on YouTube. So finally, I would like to thank everyone for attending, and thanks also to our panelists for their insights. So with that, this webinar will now be ending. Thank you all.
Thank you.
Thank you, everyone. Thanks for your time.
Bye.
Thank you.
Bye. Bye.
Bye.